It's Tuesday, the 10th of March, 2026. Welcome to the Fast 5 Business News by Fear and Greed, where we give you the top 5 business stories you need to know in just 5 minutes. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, 5 stories in 5 minutes. Before we do that, of course, you have to hit, you don't have to, but it's certainly strongly encouraged to hit the follow button, because in the next week or so, the playlist that you may be listening to this podcast through on Spotify called Your Daily Drive is going to disappear, which will make it a little bit harder to find the Fast 5. So if you just hit follow right now, you'll continue to be able to find us very easily into the future. Let's get going. Story number 1, the price of oil has pushed through $116 a barrel yesterday, at one point wiping $130 billion from the local share market. As fears of a global economic meltdown hit investors, the S&P ASX 200 ended up closing down nearly 3% to 8,599 points, having recovered somewhat in the afternoon sessions. But at its low, the ASX 200 was off 4.3% yesterday. That is the steepest sell-off since the COVID-19 pandemic in 2020. It's down 7% since the beginning of last week. The tumble came as oil prices surged towards $120 a barrel, including a massive 24% surge yesterday alone. Brent is now trading at almost double its level at the beginning of this year. The immediate reason for the surge is the attacks and closures of oil refineries in the Middle East and the closure of the Strait of Hormuz, which carries about 20% of the world's oil.
Few winners yesterday. The airlines Qantas and Virgin were sold off. They get hit by higher fuel prices and a reluctance for people to travel. The tech index fell nearly 5%, down about 18% this year so far. Banks were dumped on the back of fears of an economic slowdown. The big 4 banks lost between 2 and 3% yesterday. Big miners were hammered. A bit more of that in a moment. One sector enjoying things: energy companies. Not just oil and gas either, but the coal companies as well, given the price of that commodity is up 30% since the beginning of the year.
Wow. Markets across the region were also sold off. It wasn't just Australia. Japan's benchmark Nikkei fell more than 7%. Hong Kong was down 3%.
Yeah, that's right. South Korea was down 8%. Huge economic impact in all of this and on Australia. So National Australia Bank yesterday came out and said that it reckons that headline inflation will head to 5%, core inflation 4%. Will the Reserve Bank look through that, see that as temporary? The hopes are it will, because if it doesn't, that means a bunch of interest rate rises.
Yeah, indeed. Okay, moving on to story number 2 now, Sean. Stockpiles of iron ore in China have hit record levels, up 25% since August, and that is putting pressure on Australia's big miners and also on the budget bottom line.
Yeah, so get your mind around this. 163.3 million tonnes of iron ore stockpiled in China. Basically, the property sector slowed down, doesn't need as much steel. Iron ore is a key ingredient when making steel. Now, BHP's share price tumbled late last week when it emerged that a major Chinese buyer wasn't buying some of its shipments. That kept going yesterday. BHP was down another 5%, Rio Tinto 4%, Fortescue Metals nearly 2%. Australian miners export about 915 million tonnes of iron ore each year. That's worth about $115 billion. State and federal governments get royalties, taxes from that stuff. So a 10% fall in the price of iron ore equates to a loss of about $400 million in the federal corporate tax receipts. WA gets hit really hard as well. So if we have a fall off in iron ore, not only do the miners get hurt, but so too do the governments.
Story number 3, Commonwealth Bank has referred 2 mortgage brokers and a string of accountants to police over what could be a $1 billion loan fraud.
So the Fin Review first reported in February that Commonwealth Bank had uncovered a cluster of home loans obtained using fake documents, including some income statements generated with AI, draft tax returns, shell companies. It's working with New South Wales Police, ASIC, etc. Loans were obtained via Commonwealth Bank's referrer program. So the referrer program pays accountants, real estate agents, lawyers a commission for sending customers to the bank. Also through the third-party mortgage brokers, which all the banks use on that one. It just seems that accountants were allegedly inflating clients' finances. Still needs to get to the bottom of all this. New anti-money laundering rules will cover accountants, lawyers and conveyancers from next month, but this seems to be a loophole at this point.
Indeed. Story number 4, Australia's strict social media laws are capturing not only children, but adults as well, with the global pornography site Pornhub blocking users in Australia because of age verification.
From yesterday, under new e-safety rules, any platform hosting pornography, R-rated video games or explicit AI chatbots must verify that users are over 18. Now, there's a $49.5 million fine per breach on that. Pornhub's parent company, Aylo, A-Y-L-O, has decided that rather than build an age verification system, it's just going to block all Australian users. Other sites are doing the same. It extends the social media ban for under 16-year-olds that came in last December through to adults. The eSafety Commissioner, Julie Inman-Grant, says the rules also apply to search engines, app stores and AI companion chatbots.
Last one, story number 5. Only 54% of Americans consumed alcohol last year. These are the lowest figures since Gallup surveys began in 1932. As rising health consciousness, weight loss drugs, the rise of non-alcoholic drinks and tightening budgets all conspire to reduce the number of people who are fond of a bit of a drink, Sean. It's a global phenomenon, though. Global wine sales fell 12% between 2020 and 2024 at their lowest level now in, I think it's 60 years. A recent survey showed that 20% of French vineyards are considering shutting, which is pretty extreme.
Yeah, Jim Beam paused distillation for a year at its flagship facility in Kentucky amid a global bourbon glut. Heineken is cutting 6,000 jobs. Sales for British spirits maker Diageo, so we think Guinness, Smirnoff, Johnny Walker, dropped by about 3% in the first half of the year. Who do we blame, Michael? Gen Zers. Those under the age of 35, they drink way less than middle and older-aged adults, according to Gallup. They don't also meet up as much, so social media and telecommunications means they don't have to physically meet up to socialise, and that's reduced alcohol intake. Also, legalised marijuana in many states in the US particularly could be having an impact.
There you go. All right, the top 5 business stories in 5 minutes. Thank you, Sean.
Thanks, Michael.
It's Tuesday, the 10th of March, 2026. Remember to hit follow on the podcast. And if 5 minutes isn't enough, you can find our longer daily show called Fear and Greed, wherever you listen to podcasts. I'm Michael Thompson, and that was the Fast 5 Business News by Fear and Greed.